Welcome back. Oil prices hitting new multi-year lows, breaking below $30 and then $29 a barrel. First time in more than 12 years. We are back up above 29, but we're certainly looking at this market continue to deteriorate. This as global energy markets anticipate massive gluts of oil, including Iranian oil, coming to the market in just a matter of weeks. How much lower can oil go? And will gasoline prices go with it? And what are the broader implications? You want to bring in Schork Report author Stephen Schork. Stephen, great to see you.
Great to be back.
Well,
Happy
man,
New Year.
oh, man, were you right about this market in terms of where it has gone? First up, I want to get your take on where oil is right now. Are you surprised that we are as low as we are when you look at gasoline and crude oil? Do you expect it to continue moving down?
Well, first, yes, I do expect it to continue moving down. And yes, I am surprised we are this low. We have a situation now, Maria, that in November, December, which is the peak of the winter demand season for crude oil this year, the demand that is, was extraordinarily high. And then when you factor in $2 gasoline, no snow, no ice on a lot of the roadways, so we did not see the normal weather-related demand destruction, gasoline demand was very high. And therefore, we had wide margins. So the refiners did really well. So demand was very strong. But what happened, Maria? Production, supplies continued to build for crude oil. Prices continued to fall. So now the concern is, at the end of this quarter, we're going to go into our maintenance season. So we're going to take down about 250,000, 300,000 barrels a day of crude oil demand as refineries begin to do their maintenance schedule. So you have to ask yourself, when demand is extraordinarily high, supplies continue to build, prices continue to fall, what happens now over the next couple of months when we take more demand out of the market?
Yeah, I want to ask you about the demand story.
Definitely is a bearish tenor.
On the global market, because when we spoke, I don't know, I feel like it was 6 or 8 months ago, you said to me, look, everybody looks at oil as a catalyst of something to come. And Mike Murphy made this point earlier. At some point, you know, $2 and below gasoline is going to be a positive for the consumer. They're going to spend that money. But you looked at oil differently. Not that it was a catalyst, but more of an indicator of what's going on in the world today. Is this telling us that the global growth story is a lot worse and slower than anybody thought?
Oh, absolutely, Maria, because it's not just oil. I was in Toronto last week giving a talk for a bank, and I gave the oil and gas perspective, and needless to say, I was bearish. But every other expert they had up there talking about fertilizers, metallurgical coal, iron ore, the base metals, they made me look like a Pollyanna. So you get to the point where, keep in mind, commodities do not drive economic growth. Economic growth drives commodity prices. And when you get a massive pullback, not just in oil, but in every industrial metal out there, that is a telltale. So, Maria, this notion that I have more money to spend, well, I tell you what, last Friday's retail sales number, which showed that this year, despite $2 gasoline, was the worst year for retail sales since the Great Recession, bears the notion out that cheap commodities is not a great sign of economic growth. It is a great sign of economic doldrums.
Hey, Steve. So when you see all this oil coming on from Iran, 500 barrels a day, it appears to me as if we've kind of decoupled a little bit. You know, when you saw planes being shot down in the Middle East, I feel like 5, 6 years ago, that would have been a huge spike in the price of oil here in the U.S., and it had very little impact. So is what Iran's doing by bringing this oil onto the market really going to affect our oil, or are we more just U.S. focused right now? Is that what's driving our price?
Well, right now, globally, right, because the global market is still bifurcated. We have Canada and the United States with North American production, and that is what it is. And that is to say that because the banks cannot allow their loans to these E&Ps to fail, they are kicking the production can down the road. So we're still producing a lot of crude oil here, and that's going to remain the glut here in North America. Globally, what we're looking at is the widest chasm ever between the Sunni side of OPEC and the Shia side of OPEC. So right now, with the introduction of these Iranian barrels over the next couple of months, where are they competing for? They're competing for market share in Asia. Now, we all know that China is having its difficulties right now, as is Japan. So now you have Saudi Arabia and Iran, the #1, #4 producer in OPEC, competing for market share in a market that is clearly challenged. So That said, this is a price war. The only thing I think that can really get this market really going is if the Cold War now between the Sunnis and the Shia spurs into a hot war between Iran and Saudi Arabia.
Wow. Stephen, real quick here, final question. We got a huge amount of data coming out of China tomorrow. We've got the China GDP, China retail sales, China industrial production. What are you expecting? Is that priced into the market already, or are we going to see bad numbers out of China and the market's going to take another major meltdown tomorrow?
I think the cloak or the curtain behind China has finally been pulled away, and we've all questioned it now. We have the constant devaluations of the currency, 6 interest rate cuts, China dumping its industrial surplus metals onto the market. So I think that has already been priced in, Maria. I'm not expecting great numbers, and hence I do really think that Asia is struggling, Japan's struggling, and that is certainly a bearish factor for oil, and we should remain glutted this year, and prices are going to remain challenged.
Stephen, thank you.
Thank you, Maria.
We'll see you soon, my friend. Stephen Schork there.